So it's the morning after the night before, in one of the most shocking developments in UK political history. The UK has voted to leave the European Union. Hi, I'm Tom Selby, the Senior Analyst at AJ Bell, and I'm joined today by Russ Mould, our Investment Director, and we'll be looking at the fallout from the EU referendum and what it means for investors. Russ, thank you very much for joining me today.
Pleasure, Tom.
So, Russ, a result nobody expected, I think it's fair to say.
Yes, I think that's fair to say. I mean, the market rallied hugely in the 5 or 6 days going into the number. The FTSE 100, the pound, all rallied very, very strongly, and obviously they've given a lot of that back. I mean, I think what's interesting is if you look, we're sat here now, on a 9:15 in the morning or something, the FTSE 100 is basically where it was 10 days ago. So all it's done is give back the rally. So I think in that respect, don't panic is probably the first message, and take a longer term perspective.
So a lot of people will probably be tempted to trade on the back of this. What would, no, without giving any advice here, what would you say to someone who's tempted to trade on the back of some of this uncertainty?
Well, I think first of all, initially, the way the market reacted, it was kind of a Pavlov's dog job. Ring the bell and markets just go into automatic mode. So what did they do on a big picture? People bought dollars, they bought yen, they bought gold, they sold shares. And notice, by the way, that the UK is outperforming Europe substantially this morning. The Italian index was down 13% at one stage when the UK was down 5 or 6. So I think in that respect, the market's kind of made up its initial reaction. Now, if you want to trade off that, that's up to you. But I think today what you're doing is trying to sort of gauge where money flows are going. Now, remember, there's that old quote from Ben Graham, Warren Buffett's mentor: in the short term, the stock market is a voting machine. In the long run, it's a weighing machine. Today, the stock market is voting. It's making a snap decision. But in the long run, valuations are set by cash flow and profits. Now, I don't have a crystal ball. You don't. Nobody does. In the end, we don't know what this vote is going to mean for corporate cash flows and profits in the very long term. So I think if you are going to invest or trade today, I'd do it for the right reasons. And again, it's your decision, not mine. Don't do it just because you think there's money moving around, there's a chance to nip in. Do it because you think there's a fundamental case for a stock or a bond that's overvalued and you want to sell it, or undervalued and you want to buy it based on long-term cash flows. Don't look to the voting machine, look to the weighing machine.
And now you mentioned that the FTSE's perhaps not down as much as people may have expected. Not yet. We're only at 9:15.
Exactly.
Are there any particular companies that are suffering at the moment?
Yeah, and I think this is the interesting thing. If people are looking for opportunities, I'd expect them to look for the stocks that have been absolutely hammered. And if you look, again, it's kind of the usual suspects. If you looked at how the market opened, banks were hit hard. House builders were hit hard, life insurers, asset gatherers, they were hit hard because of the doubts over the UK economy, because of doubts over whether people want sterling assets or not, and the knock to overall confidence. The only two stocks that were up in the FTSE 100 were Randgold Resources and Fresnillo, gold and silver miner, haven plays. Yeah. The ones in the middle, the ones that weren't doing anywhere near as badly, were the big dollar earners, the companies with big overseas assets, the oils. Actually, HSBC, AstraZeneca, Glaxo, those are the ones that were hanging tough, along with some of the defensives, the utilities, the Reckitt's, the Unilevers. So the market did exactly, in a way, what you would expect it to do. The issue now is, what are the long-term implications for cash flows, profits, the economy? We just don't know is the truth, but that's certainly the market's response, and it's kind of what you'd have expected. Again, the other point to make is, the European markets are doing a lot worse than the UK, because it raises obviously economic and existential questions about the European Union. We've got Marine Le Pen of the Front National in France, Geert Wilders of the Dutch for Freedom Party, the True Finns are probably going to pipe up at some stage. So you've got the Europeans now calling for their own referenda, which again raises very, very big questions. And we've got the Spanish election on Sunday for good measure. So
the message to investors here then, there's obviously a lot going on, both from a micro perspective, from a macro perspective as well. Don't make any panic decisions based on what's happening today.
Yes, stick to your discipline, stick to your strategy, stick to what works for you. If you want to trade, do it, but do it for the right reasons. But in the end, shares are a long-term investment. Now, we've seen sterling drop like a rock this morning. It's gone down to, I think, a 1985 low against the dollar at one stage before. Again, it's begun to rally. I think remember, after the ERM, when the pound fell out of the exchange rate mechanism in 1992, it took 2 years to recapture the ground that it lost. Now, that might sound like a long time, but again, from an investment perspective, it really isn't. So if anything, sterling's weakness in the short term may actually give a bit of a boost to the UK economy. The FTSE 100 earns 3/4 of its money from overseas, so a weak pound is actually quite helpful. Again, that may explain why the FTSE is outperforming the European indices. So again, there are lots of long-term considerations here. We don't know how they're going to play out. So I think in the end, you've got to go back to brass tacks, to valuation. Yeah, you can have cheap stocks and good news. You don't always get them at the same time. In fact, very, very rarely. So some people may view this as an opportunity to buy, but they've got to do it again thinking this is a fundamentally good company that's now fundamentally undervalued, not just the share price had a bit of a shellacking, I'll have a nibble. It's got to be a lot more fundamentally based than that.
Russ, I'm sure we'll be talking about this a lot over the next 2 years. Thank you very much for your time though this morning. Thank you very much for watching, and we'll see you again next time.